Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, jumping into the daily chart on TradingView, the chart is pulled from Binance. You can see that we have a Fibonacci retracement on the chart. The swing high was in April. The swing low was in January of 2022, or rather in February, I should say. And as you can see, we are way below our 1.618 technical target. And the 1.618 is usually your technical target once you start losing this low. The low of the Fibonacci retracement, that's precisely what we did in May. And we had a little trading range here before we capitulated all the way down to the second fib level at 54 cents. Now, Glmr is way below that as well. We're currently trading above the 2.414 Fibonacci retracement level. I did give you this quite a bit ago. And as you can see, we are in a bear flag pattern as well. So this is when you have a drop to the downside and a channel down pattern afterwards. And this is a very bearish pattern typically with a breakout to the downside. You take the trend line or the pole of the pattern and you place it off the support trend line of the channel and you get your technical target to the downside, which is currently going to be at 21 cents roughly. Yeah, 21.5 cents. So that's what we have currently for Glmr. We obviously lost the support of this block anywhere from 51 cents to 42.5 cents. So potentially with a relief rally, we might come and retest this resistance. Well, now it is our resistance or previous support, you should say. And as you can see, we had bounces in October, and we might come back up and retest this level and then print a lower low. And in fact, if we do that, that's still adhering to the downtrend that we're in. Constant lower lows and constant lower highs. That's exactly what a downtrend is consisted of. So I would keep my eye on that. Also, I would target the upper level of the channel, or not the channel, the resistance zone over here at 52 cents. Roughly 51.5, let's say, because we did have, as you can see, many touches off of that area. And also you have the 55 EMA on the daily chart and the 20 EMA on the daily chart. Those will be major resistance levels as well. Now, talking about support levels, you have the 2.618 Fibonacci level here at 25.5 cents, and that would be our next target if we start losing the 2.414 at 32, roughly 33 cents. And if that happens, like I said, yeah, potentially we're going to be coming back down and retesting this level. And we're going to be coming down until Bitcoin sort of finds its footing, because if the S&P 500 crashes in December, let's say, then the Bitcoin chart is going to definitely see another pullback, potentially taking us down to $12,000, maybe $10,000. And that will take a bunch of altcoins 50, 40, 60% down. And if I zoom out here and show you how low we've gone from the all-time high for Glmr, which was at $16, then right now we're sitting at a 97% pullback. If we go all the way down to the 2.618 here, that would technically take us to 98.4%. And I think that's very, very possible. Altcoins typically go 95 to 99% down in a bear market. And if we're going to see that for Glmr, I wouldn't say that that's the end of the project or the end of Moonbeam. That's simply a bear market correction. And to be honest with you, this is a good range to start dollar cost averaging right now. Never go all in, obviously, because there is always room to drop further down. But I would say below 30 cents, below 40 cents, these are good areas to dollar cost average into the project. And we may see a move below even 20 cents down the line. Who knows? Who knows where the capitulation will end? But until then, dollar cost averaging and building a strong position is all we can do. Now, taking a look at the daily RSI, you have multiple bounces off of the blue trend line here, and that's a great entry point historically, but well, great entry point for a swing trade or a short-term trade. If you bought off all of these dips here, you are going to be at a loss right now because, as you can see, we do have a bullish divergence. So all the lows here on the RSI are actually higher lows because each low is higher than the previous one. That's not really the case for the price action here. As you can see, our lows are constantly lower, so we're printing lower lows on the price action and we're printing higher lows on the RSI. This is called a bullish divergence, and this is a pretty significant one, and it has been going on since June, so for quite a while, almost 6 months. And I think this may play out sometime in spring where we have that massive breakout potentially. But like I said, we can't be certain of anything in the crypto markets. And yeah, that's regarding the daily chart. We can switch over to the Binance chart as well. So taking a look at the daily chart here, slightly different setup. So we have our descending support trend line that was turned resistance just in November here. When we flipped it to resistance, we basically lost it, and now we're hitting our head on it, and we're coming back down each time we hit our head on it. So this is now a resistance level, and as you can see, we've been holding it as support for quite a while here. So we had multiple retests during summer, and we had multiple retests during fall, and right now we've lost it, and this is quite a negative sign. But long term, I don't think the fact that we're printing, lower lows, I don't think that's going to affect what's going to happen during the next bull market. We're going to, obviously print hopefully all-time highs for GLMR. We'll see about that with the circulating supply, or what's the circulating supply going to look like when the bull market arrives. Now, a major resistance level here to keep an eye on is 43 cents. So this was the low that we printed in October. And since then, we lost that level at the beginning of the month here in November. And we have been in a, we haven't retested that level really as resistance. So potentially with a relief rally, we may come all the way up there to 43 cents, retest that and come back down, maybe hold the yellow trend line as support once again. That's just speculation, obviously, but if you're looking for a nice swing trade opportunity, then every time you see these deep capitulations, you could enter and look for a retest off of a major resistance level above us, or the 20 EMA, or possibly the 55 EMA if you're a bit more risky. So that's what I would do if I simply had some funds for swing trading. But I just simply buy into the dip. I buy the altcoins that I'm looking to hold for the next 2 years. I stake them, and sometimes I do swing trade when I feel a swing trade is necessary. I never force a trade because, trust me, if you force a trade, you're going to get wrecked. That happened to me before, so I'm simply speaking out of experience. Now, taking a look at the daily stochastic, you can see that we are in the oversold below the index of 20, just like we were in this period from August to September. And if you take a look at the daily RSI, obviously we just looked at that, but this is a clean image of the daily RSI. We're printing higher lows every single time, but we are very low compared to what we were doing all the way back here in April of 2022. So that's regarding GLMR. If I missed out anything important, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon, and I'm going to catch you in the next one. Goodbye and good night.